We're still looking at financials. Financials is definitely one key area where we're still looking at in terms of adding exposures to. Real estate is also another area where we're adding exposures to, and then in particular, where the IT services side, we were actually underweighting IT services quite a bit across the Indian name. So we've actually closed that underweight position, and we've actually become a bit more neutral within the fund, just given some of the pullbacks and given sort of the expectations we're seeing in terms of overall growth expectations within that sector as well.
What's, according to you, Ken, right now the big risk? And how do you think Asia is preparing for tariffs coming out of the U.S.? Also, there's debate on whether tariffs are coming, when are they coming, how much, where.
Yeah, overall, I think that geopolitical risk still sort of is a potential negative impact on overall sentiment, because the fact is that while everyone's talking about how China's being have set a 5% GDP target growth, the fact is that if there's actually going to be more tariffs being announced, or specifically, let's say if overall fiscal expansion is not going to be at that 1.5% to 2% of GDP level for China, or overall if consumers are still not going out to consume, that could be an impact on China. And in the case of the U.S., what happens if inflation comes back much quicker and if growth falls, at a much quicker pace than anticipated, then, you do have that potential for stagflation, which is in our base case, but, that could be an issue as well. And then of course, within the EU and in particular with the UK as well, how are they going to handle specifically the overall Ukraine conflict, which could have an impact in terms of overall spending across various countries within Europe as well. So there's still a lot of potential hiccups along the way. But given where we are right now, given where the markets are, especially here in Asia, we think that there's a lot of great opportunities to invest both on the equity side as well as on the fixed income side.
What's your top investment advice right now, Ken?
Yeah, I mean, right now we look at kind of where we are. China is definitely still looking at it as a great place to invest along the emerging market side, given the fact that we've had that strong push around AI and technology. But also at the same time, when we look at here in Asia, Japan, has been kind of the country that has been overlooked a bit, given some of the recent rallies we've seen in China. But overall, the fact is that Japan is still a very strong developed market. So if you look at the developed market as a whole, they've underperformed this year. The fact is that some of the flows have gone into Europe over this past couple months. But looking at overall Japanese corporates in terms of earnings growth, in terms of the BOJ potentially setting a little bit higher interest rate policies, because the fact is that overall growth, overall expansion is a little bit sort of maybe above pace. Those are sort of signs that potentially the Japanese economy can revive further, and hence that should lead to potential further EPS upgrades in Japan later on in the year, which could help overall sentiment for Japanese markets, which has been, I would say, a bit more muted over the past few quarters.